There's no question that just like there's going to be a run on the banks, meaning people are trying to get their money out of the banks, they're going to be running to put it into gold because no money is safe now in the bank because either your bank is going to fail and you will lose your money, or your bank won't fail because the government bails it out and your money will lose its purchasing power. So either way, you should withdraw your money now, but don't stick it under your mattress because it's going to lose purchasing power there too. You've got to convert it to real money. You've got to turn it into gold. Now, if banks could offer you a high enough rate of interest to offset the inflation, then that might be an incentive to leave the money in the bank. But the banks can't do that because they can't afford it because they're broke, because they've already locked up all their deposits in long-term, low-yielding mortgages and treasuries. So they can't pay you enough to offset the loss of inflation.
Peter Schiff, chief economist and global strategist at Euro Pacific Capital, have been sounding out the likelihood of gold prices witnessing a surge. Schiff predicts that the value of gold could rise by 10 times its current value in the event of a loss of faith in the US dollar and out-of-control inflation. He argues that gold has demonstrated its reliability over centuries and may be a more suitable option for investors seeking a stable, long-term investment. As per Schiff's assessment, gold may offer a more secure investment alternative to those concerned about economic uncertainty and inflation. Recently, Schiff tweeted that it looks like $2,000 may be the new support level for gold. If so, we are either near the bottom of a new higher trading range or on the launch pad for a moonshot. Either way, the time to buy gold is now. Peter Schiff criticizes Fed by saying, thanks to the mistakes the Fed has made since the 2008 crisis, we have a much bigger bubble now. Schiff sees the recent collapses of major banks, including Silicon Valley Bank and Signature Bank, as the start of the next financial crisis. Schiff said, there's no way these tiny rate hikes are going to do anything to bend the inflation curve. The Fed is going to continue to get further and further behind the curve. Schiff's analysis suggests that inflation will erode the value of the US dollar and banks may not be able to offer attractive interest rates to compensate for this loss. As a result, individuals may opt to withdraw their funds from banks to preserve the value of their money. In his recent tweet, Schiff said, get rid of your US dollars now, while there's still enough people who still can't read it. Before proceeding further in this video, please make sure to click on the subscribe button below to stay updated with our latest content.
The only thing that's surprising about the dollar's reserve status is that it still has it. Despite everything that we've done, we haven't lost that privilege. But I think the current financial crisis, which just started, is going to ultimately deliver the death blow to that status. I think the amount of inflation that the Federal Reserve is going to unleash in order to try to counteract this financial crisis. I mean, people are still reluctant to call it a financial crisis. That's exactly what it is, except it's bigger in scale and it's going to be far more impactful than the 2008 crisis. And it's probably going to result in even more aggressive and reckless monetary and fiscal policy. And this time, it's going to take the dollar's reserve status down with it. So I think that's going to really complicate things here in the U.S. because that's going to send inflation much, much higher and American standards of living much lower. But I do think that we're going to have very high inflation for many years to come. I mean, elevated double-digit inflation, and where the first digit may not be a 1, it could be larger than a 1, right? So it's going to be very substantial inflation, even if it doesn't technically qualify as hyperinflation. But that's not, ruled out. So you have to be vigilant and be prepared because that worst case scenario may in fact be the scenario that ends up playing out.
Peter Schiff highlights that the Federal Reserve expanded its balance sheet by almost $400 billion in just 2 weeks. He believes that the bank bailouts will reduce the value of everyone's paycheck. According to Schiff's recent tweet, 0% interest rates are the past, but QE is the future. The Fed will have no viable political option but to monetize massive federal budget deficits, prop up insolvent banks, and buy treasuries the rest of the world dumps. Soaring inflation means higher interest rates.
First of all, thanks to the Fed's policies, as well as government regulation and the moral hazards that it creates, the entire banking system is completely insolvent, including the too big to fail banks. All those banks would fail if the government stepped out of the way. But the reason our financial system is so vulnerable and so leveraged and insolvent is because of government. And now you have politicians trying to claim that the problems for Silicon Valley Bank or Signature Bank were the result of a lack of regulation or of deregulation, when in fact the opposite is true. It was excessive regulation that is the reason that the banks got into this predicament in the first place. And of course, without the Fed holding interest rates so low for so long, they wouldn't have even been able to have loaded up their balance sheet with all this debt. But all the banks have done this. I mean, think about the mortgage market. How many Americans over the last 5 or 10 years have successfully refinanced their mortgages to have rates in the threes? That is a huge gain for the borrower, but that comes at an enormous loss for the lender, who is now stuck with that low yielding paper in a much higher and rising interest rate environment. So all the banks are going to lose a fortune as a result of owning these mortgages, and they will fail unless the governments bail them out by creating more inflation, which is ultimately how the bailouts are paid for. In fact, the Fed has already returned to quantitative easing, whether they want to call it that or not, but the balance sheet is up about $400 billion since this financial crisis began, and it's going to get a lot bigger in order for the Fed to postpone the pain of the crisis and socialize it into a different form of pain, which will be higher prices, because that is what's the substitute. So on the one hand, the government says, don't worry about your bank account, we're going to guarantee it. But on the other hand, you now have to worry about the value of the money that's deposited in your bank, because even though the bank might not fail and you won't lose your money, when you go to spend your money, you won't be able to buy very much because your money is going to lose its purchasing power.
Peter Schiff predicts that inflation hedges, particularly precious metals miners, are on the verge of a significant breakout. He believes that gold stocks are the modern-day tech stocks and warns that individuals must prepare for this new reality to avoid the consequences. Goldbud recently pointed out that investors who didn't see the gold rally coming can buy gold stocks cheaper than those who did, but they won't. Most investors likely won't even look at gold stocks until prices are double or triple current levels. Then they'll likely be even higher before they pull the trigger. Peter Schiff believes that the Federal Reserve is oblivious to the impending crisis caused by its own policies. Investors are far too complacent and remain asleep. They have no appreciation of the magnitude of the problem the Fed has created. We could be days away from a major breakdown in the US dollar and breakout in gold. Perhaps this will finally be the wake-up call investors need.
But I think what would happen now is private enterprises, private businesses, whether it's a bank or any other institution, doesn't even have to be a financial institution, but it has to be capable of holding custody of gold. It can then digitize, tokenize that gold, put it on a blockchain or other form, and allow individuals to own those tokens and then transact in them on the internet instantaneously for a low cost. They can price goods and services in grams of gold. They can pay for and be paid in grams of gold, and gold can circulate easily around the globe as money, as a unit of account, as a medium of exchange, and as a store of value. And so I think we're headed in that direction. As far as what the Chinese may do, to the extent that they may decide that they want to back their currency by gold, make it redeemable. Whereas the United States, I think the upside is very limited and the downside is quite substantial, especially when you view it from the prism of, let's say, gold, real money, as far as how much value U.S. assets may in fact lose if you price those assets in gold. You can't simply look at what the price of stocks would be or bonds in dollars if you have a moving target, because the dollar is collapsing. And so it's hard to measure the value of something when your ruler is constantly shrinking, right? So you're not going to get a good result. So I think looking abroad and investing abroad and in foreign stocks, dividend paying value stocks, I mean, that's what you want to do. That strategy has been paying off. We substantially outperformed the U.S. markets last year with positive returns in our dividend payer strategy and our value strategies, even despite the strong dollar, because these were all international stocks that managed to, close the year, in the black, while the Nasdaq was down 30%, and smaller declines in the S&P and Dow, but still substantial declines.
According to The Economist, banks are ill-equipped to handle a combination of a significant economic downturn and a surge in inflation. So if we have high inflation and a recession at the same time, banks are going to fail. Schiff concluded that now it's inflation that is the risk, and so it doesn't matter if your bank fails. You're still going to lose. In the event that your bank failed, you lose your money. But now, because the government won't let the banks fail, everybody who has a bank account is going to lose purchasing power. On this note, we conclude our video. Do you agree with Peter Schiff's outlook towards financial crisis and expected breakdown in the US dollar and breakout in gold? Share your thoughts in the comments section below. If you found this information helpful, please consider giving this video a thumbs up and subscribe to our channel. We look forward to bringing you more updates in the future.